Hi guys, welcome to another Mill Social Talk podcast. As you know, I always say this, we bring you the best of the best. We always bring you folks in the community who knows what they're doing, who will bring a betterment to your lifestyle. So today we have Mr. Keith, Kenneth Keith from Chase Bank. And as some of you know, I've been teaming up with Chase Bank to bring you some great programs. I mean, Ken been in the business for a while. He will tell you who he is. And always remember that this is the Mill Social Talk podcast. And as we move forward with folks in the community who knows what they're doing, who have experience and who've been in this business a long time, I want to bring you Kenneth Keith. And Kenneth, welcome to the Mill Social Talk podcast. Kenneth, tell me about, of course you're from Chase, tell me about who you are, how long you've been in business, and what you do.
Great. Well, Leroy, first, thanks so much for having me today. This is a special day to be partnering with someone like yourself, because I think we have a lot of commonalities. We first met, one of the things we talked about really was giving back to the community, right? And, you know, I know a lot of people look at the big banks and they may not really be able to see through the front door, and that is that a bank like Chase has a huge commitment. Even though we're a national organization, Leroy, we try to be a community bank, right? Today we're sitting here in Rogers Park, and even though it's Chase, from our standpoint here at this community bank, we care about the people in these neighborhoods, right? And I think one of the things that we first talked about was some home buyer grants that we're doing. And what's unique about Chase, many grants have strings attached, right? Customer has to be in the home a certain period of time, otherwise it's not a forgivable grant. In our case, most of our grants, which can range from $2,500 to $5,000, they're not only driven by income, they can be driven by the zip code, right? So we're trying to help the communities grow. I've been in mortgage banking for 20 years. I'm going to age myself, although when I first told this young man that, he laughed and said, "Well, I got you beat by a few." So maybe that's why we get along so well. We both have some gray hairs and
There you go.
a lot of good stories to share. But I've been in mortgage banking, 20 years, and it's a great way to make a living because you really get a sense of helping people. How many times have you gotten an email or a call from somebody that says, "Hey, we finished unpacking that last box, and we're having dinner at our table today." And there's a sense that comes with that, and I think that's something that I align really well with what Chase values are. And when I met you, I got that same sense, right? So,
well, I want this. The people listen to this podcast, we always bring an authentic self, right? Because I want people to know that we're not just fluffing. We are doing what the community needs. And when I met Ken, I met you with Justin.
Yeah.
And I want to say, honestly, I never really worked. I have my accounts with Chase.
Yeah.
I have my mortgages with Chase.
A lot of people do.
You know what I'm saying? But I've never done any business with Chase. So I want to say, in full disclosure, so I've never done any mortgages with Chase.
Yeah.
And so when Ken came to the office and just I'm like, okay, Chase Bank, big bank, how will you help the community? And because, and to be honest, I've worked with small banks and we've done a lot of, they are part of the CRA program. They got their head of CRA. So I told Ken, well, okay, you guys are a big bank. I mean, how will you help? The fact that, and so I was happy to know that they kind of broke it down. You and Justin kind of made me aware that yes, you guys want to be a part. I mean, you're a part of the community, and I bank here at this bank where we are in Rogers Park, and you guys were interested in helping the community, and I was excited about that. Because that had never came to me before, right?
Right.
So I wanted to okay, all right. So Chase wanted to help the community, which I'm a guy who actually in the community. I work real closely with a lot of the organizations in my community. So that was really, really helpful to me for you, by the way.
Yeah.
And I want to say, give you and Justin the kudos to come to my office and say, hey, we'd like to, join and team up. So I was happy about that. And so as we move this along, I want you guys to know I'm getting to know Ken, and I think Ken's a great guy. He's been in the business and has the experience to do this. But as I say that, Ken, I want to kind of take off with it because I want people to know this is not. I'm just not saying that. I really want to team up.
Yeah.
As I'm teaming up with you, I want the folks that listen to the podcast to know, well, hey, you know what? We need to come see Chase, because a lot of people, as I told you before, I'm gonna be public about it, was like, oh, Chase not gonna help me.
Yeah.
And you guys have the commitment. You talked about your leadership, how your leadership have the commitment to actually come in and do these loans that you know, do the community loans,
Right.
which I'm a part of. So I want to say that to be my authentic self, to say, well, hey, I'm really proud that you guys decided to do that.
Yeah.
Now, as I went through that, I want you to kind of tell me a little bit more about some of the products that you have done that you think you can help the community with, some of the products that you have done over the years, some of your experiences,
Yeah.
so that the folks that's listening could say, well, yeah, I could use Ken to help me, whether it's a refi, a HELOC, a purchase, a 2-flat, some of the product that you're good at.
Right. No, that's a great segue.
Yeah.
So for me personally, so I am responsible for all residential lending, and that it can be from single family to 4-unit properties, owner occupied or investment. And Chase, here, yesterday I was lucky enough to be on a national call where we announced for our vets, right? I think, there's a saying that I heard a long time ago, we see someone who's in uniform and we say, thank you for your service.
Yeah.
And sometimes, I've heard that they're thinking, okay, beyond a thank you, what can you do for me as Chase, for example, right? So all lenders have a VA loan, right? We announced in the marketplace yesterday that above and beyond all the VA benefits that a vet is entitled to, or a family member may be entitled to, we're giving an additional $2,000 to vets that qualify for a VA loan.
Is that part of your closing cost, or just
Part of a closing, it's a closing cost credit.
Closing cost credit, okay.
Yeah, and Leroy, what's exciting, that can be layered, what we call layered, with other offers. For example, the grant that we talked about. So if a vet is buying an eligible home that's eligible for, example, one of our $5,000 grants, they can get a VA loan, which could be 0% down, right?
Okay, sure.
They can get the $5,000 grant if it's, eligible. And on top of that, we can stack the $2,000 towards closing costs, right? So we're really trying to help people establish and get to that American dream of homeownership, which, by the way, let's be honest, today is a little bit trickier than it might have been, a year ago, with interest rates going up
True.
and home values going up. If someone was thinking of getting into the market a year ago and they waited, what might have been affordable to them 12 months ago may not seem affordable today. And so what we're doing as Chase, and what I'm trying to do with Leroy, is to kind of bust some myths and show people that maybe it is still affordable, right? So today we hosted our second first-time homebuyer seminar. We're trying to get out in the community and bring what we offer and what Chase offers back to the community, and tell folks one-on-one, right, to go through what does it really mean to own a home? What expenses are involved? I'm currently renting. Does it make sense for me to buy? What am I not thinking about if I do buy that I should be aware of, right? So Leroy and I do a good job of that. And for me personally, if it means uncovering the fact that maybe somebody just isn't ready to buy today, that's okay, because what's important is giving them honest advice.
No, and it was, see, you're total residential, which is great.
Yeah.
I mean, now, does, and I'm gonna ask you this, it's for someone who does not wanna buy, does Chase offer some kind of credit counseling?
We do. We have credit counseling in a couple of different flavors. The first and easiest, most of the folks listening to this podcast today are possibly or probably Chase customers on the bank side, whether you have a credit card, checking, savings, some relationship with us on the bank side. On our mobile app, we have what's called Credit Journey, which is a free service that we give to our customers. It's a great tool. It's already there for you on your app. And what's really nice about it, and you can come into any Chase branch and meet with a banker and they'll show you how to navigate it, but it's pretty self-explanatory. And what you can do, you can look at your profile and you can say, okay, today my credit score is 700. what would I need to do to get it to 740 or 750, right? Because we know that credit score not only drives your ability to get an approval, but it's also the higher your credit score, the more likely you are to get a preferred rate, right? So Credit Journey, again, which is available on the app,
Credit
the mobile
Journey,
app.
okay.
Yep. You can say, hey, if I paid off this credit card or I paid down that car loan, what would it mean to, what would it move my credit score to? So you can do what I call what ifs and play around with it. And then you can set a goal that says, okay, I want to get my credit score up 40 points. And to do that, I'm gonna have to pay down this credit card or pay down this car loan. I gotta start putting some money away and save so that I can make that happen, right? So then you can set up a monthly savings plan for yourself, right? Maybe you take an extra $50 or $100 from your payroll and put it into a separate account so that in 3 months you can pay down that credit card and have your credit score go up and make you a perfect candidate to get a preferred rate, right? And this is important, Leroy. A rate for a mortgage is something you're gonna live with potentially for 30 years, right? So if you can save a quarter point or a half point or whatever the case might be, that's a savings
thousands of
monthly
dollars, yeah.
forever, right?
Forever, yeah.
Yeah.
I mean, you know what, I've learned something from you
Yeah.
just now about your credit journey. I was not aware of that. And for the guys who are listening, I mean, check this out. Now, I want you to really kind of tap into that just maybe a little more. It's a credit journey on the Chase app.
Correct,
All
yep.
right, and you're saying that it's going to give you an actual. You pay this down $3,000. It goes up
Yeah,
10 points, 15 points. I mean, that's so crucial because I don't think. Well, let me see. I've not heard of any other banks. They may have doing that or
Yeah.
have that particular feature. So I'm thinking that's a great tool to let, my clients know.
yeah.
You mean so for those of you listening, check out. You guys probably have Chase City.
Yeah.
You know what I'm saying? Who doesn't have the app?
Right.
The bank. But I think the app. I think that's real, and I believe that, guys. For the next event, I'm going to put this on the table, which I'm going to ask Ken to really go through that particular event.
Yeah,
So
we
if
can
you're
go.
thinking of where your credit score going to be, and look out for the next event because I'm going to ask Ken to discuss credit, or whether you can bring in a slide or something just to say. Because I think that's important.
Yeah.
Because a lot of folks don't know where to go
Right,
when it comes to, when it comes to paying down your mortgage. You're sort of like, okay, so let me see what my credit score is going
Right.
to be if I pay down. And some people have, whether it's attorneys, whether it's other organizations
medical
paying
stuff,
them.
yeah, medical.
I had an experience where one lady was paying an organization, I think for 6 months, $189 to clear a $200 credit.
Yeah.
And I'm like, whoa.
Why are we doing this? Yeah.
Why are we doing this? I'm
Taking
like,
advantage
yo,
of
you
it.
gotta stop that. So I think for the next event that we have, I think we have to go ahead and sort of explain that.
Yeah.
Because other people know that.
Yep.
I mean, I wasn't aware of it, that you guys have, and I have Chase forever,
Yeah,
until now.
yeah. And I think the other thing is, people think, oh, my credit score is this, I'm never gonna get a mortgage, right? And I would just encourage people, don't draw that conclusion, right? Reach out to me or Leroy or your mortgage person at wherever you bank and ask, because there are programs for just about everybody, right? You asked me earlier to talk about programs, right? So I mentioned our VA program, which is specific to vets and their family, but you can get 100% financing. We have an FHA product, which is great. It really affords people to get into homes. And then Chase did something years ago. We created what's called a Dream Maker loan, which was kind of a hybrid of a conventional loan and an FHA loan with a couple advantages. So in an FHA loan, you're almost always going to have two pieces of mortgage insurance, right?
Right.
Upfront mortgage insurance and monthly mortgage insurance. And we created Dream Maker, which is driven by income, right? So it may not be for everybody, but what's nice about it, there's no upfront mortgage insurance, right? And there's a little bit of leniency on the credit score. So my messaging here is, again, I've talked to people and they say, oh, my credit score is 660, I know I'll never get a loan. That's not true, right? That's a myth, and we want to bust that myth.
Okay.
And we want to encourage people to apply, to learn more, to get a better understanding. And, this is one of the first-time homebuyer kits that we've shared in our last two homebuyer seminars. And we go through about 30 pages here. And a lot of it is questions that, you as a homeowner, you'll take home with you and ask your own questions, right? So that you get a better understanding of what you can afford, how does it compare to what I'm paying for rent today? What might my tax consequences be? Is interest expense tax deductible? These are things that you want to talk to your tax person about or your accountant about, but there are advantages to home ownership that may be better for you and your family than renting, right? Not all the time, but at least let's explore and ask the right questions, Leroy.
Now we know that.
Yeah.
The Fed kind of taking interest rate up, and we have maybe another with the strength of the housing market,
Right.
or the labor market.
Yeah.
They were talking about even taking the rates a little bit higher.
Yeah.
Now rates today. What did you see rates yesterday at?
You're looking at a 30-year fixed, again, depending on a lot of things, probably in the mid-sixes right now.
Mid-sixes. Okay, cool.
And yes, Leroy, you're exactly right. They're going up, and so a lot of people are very scared, right? If you watch the news, rates are going up. They've gone up. They're continuing to go up. But listen, 6.5% is still a great
It's still a
rate,
great rate,
right?
yeah.
It's still
we say that,
Yeah.
right? Because we've seen rate at, I think when I first came into business it was 11%.
right.
And right before I came in, it was 19%,
Yeah,
right?
yeah. So
So-
6.5 is sounding pretty good, right?
It's doing okay. But so it's like, okay, so I had a conversation with a client yesterday, and she's thinking, well, oh my gosh, rates are so high. Do I have to wait till next year?
Yeah.
And I'm like, and basically my overview of today's market is that the fact that now, of course, you were in the market when we crashed,
Yeah.
right?
Yeah.
And I tell my clients, I said in 2008, when the crash happened, people were stretched.
Yeah.
Today we're not.
Yeah.
Today there's a lot of folks that has a 2% mortgage that will last a lifetime that
Right.
they will not need to give up their home. So
Right.
property prices are not gonna fall like dramatically as in 2008.
Yeah.
It's not.
Yeah, no, that's a great point. I would tell you, listen, nobody knows, nobody's crystal ball is
No.
perfect. But one thing that we're really lucky with here in the Midwest, unlike maybe our counterparts on the West Coast or the
Yeah.
East Coast or the Southeast, home values in the Midwest, they haven't risen as fast
As
as
fast
they
as,
do
yeah.
in California, Florida, Arizona, Colorado. But that means they also aren't going to fall, right? So maybe we've enjoyed 3, 4, 5% growth over the last decade. But when the market crashed in 2008, the Midwest held much better than its peers in some of the other regions, right? So I personally, and I've been doing this for 20 years, I still really believe homeownership in the Midwest is the way to go if you can make it work, right? And to make it work means just understanding financially what am I signing up for, right? And what's it mean? And you want to get counsel from someone like myself on the mortgage side, someone like Leroy on the homeownership side, maybe talk to your tax person if you have one. But there's a lot involved, but I would just encourage everybody to, look into it, answer the questions that make sense for you and your family so that you can create a better future for yourselves.
I always encourage folks to purchase. When I say that, as I go back to many of my clients, and they're asking, will we be in a position to actually purchase, or should we purchase now, or should we wait till next year or whatever? And for me, I always try to counsel my client on basically what you're paying now, where you are, how much money you're losing, what kind of tax credits you're getting. I mean, there's a whole gamut of things that I try to tell you. So if you're listening and you're in a fence, you want to come in and talk with me or Ken to say, how should I, but Ken, just by the way, I just want to squeeze that in. How can they get a hold of you?
Yeah, you can reach me, my cell phone, 847-519-3832. My email is kenneth.b.keith@chase.com, and I'm in the Evanston, Orrington branch at Chase, so definitely love to hear from you. And that's another good point, that when you're renting, right, you're allowing somebody else to control how much is your rent gonna go up, right?
Sure.
And we've seen in the last couple of years, especially in the Chicago market,
Yeah,
some
rent
people have
goes up.
been pushed out of their home because landlords, they said, hey, I can, I'm getting $2,000 a month, I can get
Yeah.
$2,500, and maybe as a family, you can't afford that $500 bump up. In a mortgage, you lock in a rate, even if it's 6.5%, that rate is for life, assuming you did a fixed rate. And yes,
Yes.
taxes are probably gonna go up a little bit. Association fees, if you've got a condo, might go up a little bit. But your interest rate for the mortgage itself, it's fixed, and nobody can change that on you. Where when you rent, listen, the landlord, not necessarily your friend, it's a business to them, right?
It's a
So
business,
if
yes.
they feel they can get more rent for the space that you're taking from somebody else, they're gonna raise the rent, and if you can't pay it, even if you've been there, I've had people that have had their family, renting for 5, 6, 7 years, and then the landlord, especially in the Leroy, I know you can comment about this, you've seen rents go
I've
up quite a
seen
bit.
rents goes up like crazy. So we're in Chicago,
Yeah,
and so I want to address the Chicago market. And wherever you are,
yeah,
it may be comparative. We're in the north side of the city today, in the Rogers Park neighborhood. We have units that we rent of our own,
yeah,
and you can remember when rents from a one-bedroom was $700.
yeah,
Now we're getting $1,000 for a one-bedroom.
Yeah.
In Rogers Park, we're getting $1,100, right? 2 bedrooms is $1,200, $1,300, $1,400. Now you're talking, especially let's say you have a family of 5 or 6, you need a 3-bedroom, $1,800,
right,
$1,700, $1,800. Now, I'm gonna just reverse that to you. And I'm just saying, now, I'm gonna say something else. If you're on the south side of the city, we have seen rent going up.
yeah,
I mean, I've rented a 3-bedroom in Evanston for $2,400,
wow.
right?
Wow, yeah.
So that could even, that's $500,000 on mortgage or $400,000.
Yeah, that's a
right?
big deal, right? Yeah,
So you see, the fact is, rent's going up so much, and since we know that, I usually try to calculate and say, listen, if you're gonna pay $1,500 a month, which is average, $1,500-$1,600 a month, we can buy something. And people that's looking at this may say, yeah, but my credit is 650. This is just a question for you because I don't know. Do we have, what's the lowest credit that Chase offers, or do we have a?
yeah, I mean, every.
I don't know.
It's a fair
I
question,
don't
right?
know, so I gotta
Yeah,
ask it.
it's a fair question, right? So, between all of our programs, as I mentioned earlier, the VA program, the FHA program, the Dreammaker program, and then just your conventional, there is a possibility for everybody, to get a mortgage, right?
Okay,
It's
good.
not, there's not a straight
There's not a
line in
straight
the
line
sand.
across the board.
There's a lot of things called compensating factors, right? So if your credit score is low, but you've got, solid income.
That's what I'm talking
And
about.
you've got savings
That's
and
what I'm talking about.
reserves. We're gonna look at the whole credit profile, before we say yes or no, right? So, there's a lot of things that are important. Credit score certainly being one of them, but also job stability. We talk about something called DTI, which is your debt to income ratio, right, Leroy? So,
Right.
that is something that tells us your ability to repay a loan, right? So we look at your gross income against all your fixed monthly liabilities, which can be car payments, student loan repayments, minimum credit card payments, and then your housing expense, which is going to be made up of principal, interest, taxes, insurance, and if there's an association fee. And we look at all the fixed liabilities against your gross income. In general, we want that to be somewhere at or below about 45%, right?
And that's a good number, by
Yeah.
the way. I mean, I was waiting for you to get to that number because I wanted to, because I don't know.
Yeah.
And so this is, by the way, this is education for me also, not only for you guys that listen, but you had 45-year debt,
Yeah.
and
General.
of 45%. And
Yeah.
so if you want to just kind of dig into that a little bit, 45% includes your car payment,
Yeah.
all the interest loan, 45% of your actual income to be your expense.
Right,
That, and
That's
that-
right.
So that we want to clear it up. So when Ken says 45%, we know what
Yeah.
that is. It's like, okay, I'm making $100.
right.
I can only spend $45
That's right,
on my debt.
yeah.
But go ahead, Ken. I mean, this is I'm glad, and you said something that I really like, and it makes me comfortable in that you said the word compensating factors.
Yeah,
Because a lot of folks think, okay, well, my score is, 595 or 620. Oh, I'm not going to go to Chase and do that.
yeah,
But as you said, you got a great job.
right.
But could have been something that really caused your credit, your score to
Yeah.
go down, and that you had no control over.
And I think the other thing is, even if that's the case, even if it's not gonna work, let's find out why, and then
Yeah.
there's things you can work on to get approved in 6 months.
There
perhaps.
you
So
go.
that's
Back
hopefully
to the
helpful.
dream maker, whatever.
Yeah, Dreammaker, FHA, whatever it might be.
All right. So I think Ken has really educated me today on the Chase system as we grow and build this great relationship that we plan to have. So as he does that, then I'm gonna bring that to you,
Yeah.
and so you guys can know that listen, as a team between Chase and Mills Realty, we can actually go ahead and provide the programming or provide the programs that
Yeah.
you guys have for the community to make sure that we have a great success. Now, I want to say that as we move through, whether or not or next session, you guys will already be now introduced to, to Ken. And so at our next meeting here in Rogers Park or wherever we have it, I want you guys to know that we're just going to be bringing it to you, okay? So here, guys, just so I want to thank you guys for listening. I want to thank you guys for knowing that Mills Realty and Chase will come together to bring you the best of the best of
Yeah.
the mortgages in the industry.
Yeah, look forward to it. Super excited for
Ken,
it.
tell the folks again where they can find you.
847-519-3832 or kenneth.b.keith@chase.com. So keep the American dream alive, look into it, take care of your family, and if owning a home is what you want, it's achievable. So Leroy, thank you so much.
And again, this is the Mills Social Talk Podcast. You can always connect with us at themillsreal.com. You can always call me at 773-764-9547. But again, please share and please like. Let us know how we can help. As I always said, if you want to know about a topic, let me know and I will bring it to you. Thanks again for listening to the Mills Social Talk Podcast. And again, until the next podcast, thank you guys for listening.